Hello, dear traders. Welcome to another webinar. My name is Angelo Ioannidis, your host, your presenter, your friend, your mentor, teacher, hopefully all of the above. Guys, if you are watching this, if you're seeing me live right now, let me know. Hit me up in this chat. Let me know where you're from. Let me know how you're doing. Let me know how your trading is going. Did you guys have a good session or two today? Some good trades? Let us know in the chat. I've got my eyes on it. I don't see any activity yet, so I'm hoping you guys are watching this, and I hope it is streaming. The webinar we have planned for today is a very, very nice one. It is the How Indicators Work Part 2. Part 2 means that we do have the Part 1 already created, and you can watch it if you haven't. Just don't forget, it's all available on our channel. Just subscribe, click on the notification bell. You'll be notified for all future webinars, and very importantly, you will be able to watch all the previous ones we have recorded, like the Part 1 of this one. Okay, I see the first chats coming through. Mr. Trading Market, welcome again, sir. Lovely to have you. And Orange Trading as well. Ooh, looks like lots of traders are in. Hello to both of you guys. Can't see how many are watching. I hope we have a nice number. There we go. Mr. Weis from Zambia saying hello. Greetings and welcome, sir. Right, so cool. Let us know in the chat what your thoughts are. You have the comment section underneath this video as well to tell us what you want to see next. A couple of days ago, I got an email from a trader who used to work with me and told me that he wants a webinar on Forex, how to use the Forex, how to understand the pips, when to take profit stop losses in. So that is much appreciated. You have the comment session. Alexander, welcome once again, buddy. Always great to see you. Orange Trading is from Dubai. Bet you guys are having some really nice, super hot weather in Dubai. Somalia, Mr. Gabdi, nice to see you guys. Very, very nice. Uzbekistan, wow, nice. Let us all know where you're watching from. Write it in the chat. I see Philippines in the house. Welcome, Philippines. Right, guys, so let's just jump into it right away. I'm going to share right now what we have ready on the presentation for us. Title, as I mentioned, is How Indicators Work Part 2. In Part 1, we'll just take a look right now at what we did see in Part 1. So previously on Part 1, we took a look at the leading indicators, what they do. They attempt basically to show us where the market is heading. And then there is the lagging indicators. These offer a historical report more or less of where the markets were, how the price went from where they are to where they were to where they are right now. So very good stuff there. Then we splitted these two categories into 4 subcategories with trending, momentum, volatility, and volume indicators. If you guys haven't watched it, remember, if you got another 30 minutes free after the webinar, just go and watch that one too, and hopefully you'll find it very, very useful. Today's webinar, we are going to take it another step even further with a Part 2, and we're going to take a look at what we missed out on the last webinar, and that of course is the moving averages. Very, very useful tool, and I would say one of the most useful. Most of the indicators we use, from RSIs to stochastic oscillators, they do incorporate moving average lines between them. So it's good to understand what these moving averages are and what they do for us and how to use them correctly. There's loads of strategies that revolve around moving averages. So we're going to take a look at the types of moving averages, where to find them on our platform, how to use them, very important how to use them, and then we're going to show how to combine the moving averages with some leading indicators. Examples will be the CCI and the Stochastic Oscillator. My favorite of the two is the stochastic, and RSI would be my all-time favorite from leading indicators. Let me know in the chat what your favorite indicators are as well, and if you guys want a video on some specific indicators, let us know also. We can only help you by you letting us know what you need help with, right? Excellent. Moving along. So what are moving averages? Moving averages is an indicator that commonly uses the technical analysis. It's used for technical analysis, obviously. So the reason for calculating the moving average is to help smooth out the price by creating a consistent updated average price. So if we're just looking at candlesticks, the candlesticks go up and down and zigzagging. But if we do have a moving average line, it just makes it a lot more smoother to understand where the market is trending, if it's trending up or if it's trending down. Okay, I see lots of traders still writing where everyone's coming from. Love it. Keep sending anything you have in mind, guys. And I see Malaysia, I see Namibia, Mozambique. Wow, this is like from all over. I love it. I love seeing that people from all over the world are tuning in to watch these. So, first category we see, the first type of moving averages is the simple moving average. Then we have the WMAs, which is the weighted moving average, my favorites. Then smooth, simple moving average, SSMA. And then we have the exponential moving average, the EMAs. These are the 4 types you have on the platform. And I see Alexander use MA 100, Bollinger Bands, parabolic, and MACD. Lovely. That looks really nicely balanced. You have volatility in there. You have a moving average to show you the trend. You have the parabolic that shows you again trend. And then MACD is an overall beautiful indicator that shows a bit of everything. And it is a leading one as well. So, Alexander, I love your approach there. I love your setup. I hope it's working wonders for you. Guys, like Alexander, the rest of you, share your comments as well. Share your thoughts, what you guys like to use, what indicators work for you guys. Sharing is caring, right? And caring is making profits together as a team. So now let's take a look in a bit more detail about these moving average types. So the SMA follows the price in a balanced manner, not too far, not too close. So it's not the fastest moving one of all the 4, as we'll see, but it does give a nice balance. Very, very useful for, I'd say, medium to long trades. Then we have, okay, so sticking to 1, slower to react, but more consistent. That's the basic overall about the SMAs. Then the SSMA attempt to predict where the price is heading. So this is trying to lead a bit more, less subjective to noise and more accurate. So this one is a bit slower. This is maybe one of the slowest, let's say. EMAs, they fall between SMA and WMA in attempt to sensitivity flows the price. So these ones are more or less closer, a bit more fast-paced than the SMAs, but not as fast as the WMAs, as we will see. And this is a balanced reaction and consistency. So again, this is something you're going to have to choose based on your trading. If you like fast, aggressive trades, if you like more balanced trades, if you're very frequently trading with lots of small trades, then you'd go for something more or less faster. If you're more balanced and less aggressive, you'll choose something a bit slower. EMAs is a safe way to go. SMAs would be even safer way to go. SSMA would be super safe way to go. And my favorite, maybe because I'm a bit aggressive in my trading, is the WMA. It's the quickest to react on recent prices and applies the weight to the largest dates. So this one is the fastest but less reliable signal. You get a fast signal. So if you're combining this with other indicators that might be giving a bit more reliability, you're good. You just have to be very, very careful with using it. Practice makes perfect, as we always say, so you will need a lot of practice with using the WMAs. For rookies who never used MAs before, I would say SMAs or EMAs would be a better way to start from. You'll get less signals, less noise, but it will be more accurate. Once you get familiar with them and used to using the SMAs or the EMAs, then you can maybe start experimenting with the WMAs. But I don't know, if you guys start up straight away from the WMAs and get some great results and good profits, you see your accuracy range has increased dramatically, then definitely stick with what works, right? Stick with the WMAs if they're working good for you. Okay, Felix saying hello from Uganda. Hello back to you, sir. And I see Rams Mohammed from Pakistan. Zandabab. Lovely. Guys, all of you, very welcome. Send questions through. I have moderators watching this chat as well, so if you do have questions, my moderators can help and answer questions about what we're talking about now or any other thing troubling you. Okay, so where we're going to find them now, how to implement the moving averages for people who are totally new to our platform. And if that is the case and you're totally new, you're looking at IQ Options platform for the first time, there is a link in the description below where you can create an account absolutely free of charge, and you can start up your trading for the first time with that link. Just click underneath on the description and you'll find all the information you need on how to create an account with us. So once you do, and you do get here, you'll look on the bottom of the corner of the page, you'll see the little squiggly mark there, which is for the indicators. By clicking on it, you'll see that the moving averages appears here on the bottom side. Click on that. There, right bang in the middle, you'll see moving averages. Once you click on them, this is what the first page setup will look like. And you'll need to click on the types. which is this here with a little arrow. The drop box opens and you'll be able to choose which type of moving average you want. If you want to keep the SMA or the WMA, EMA, SSMA, easy stuff, very, very easy and simple to go through. Once you do implement any one of the three, this is what you'll see more or less. The charts are moving, the candles are moving in this example, they're moving upwards, and you see underneath in comparison here as well, these 4 lines. These are how they will look on the platform. As I mentioned before, SSMA is the slowest to react, and it's way down here on the bottom. Then the SMA highlighted in red is the second one to react. Then is the EMA in green, and then the fastest one is the WMA. Fastest to react means that as soon as you see the market starting to climb up, look at the directional shift. The purple one has a much slower trend upwards movement. It shows the trend is slower to pick up, where the EMA, the WMA is all the way up here. Like it's showing a much bigger uptrend reaction. So it reacts a lot faster. Very, very useful if you're trading fast. And again, like I said, if you're doing Forex trading or you're taking your time with the trades, long expirations, and you want more noise to be removed, then you're going to go with the last two, the SSMA or the SMA. If you're more aggressive, small trades, binaries or digitals, then WMAs or EMAs would be possibly best for you. Okay, now we're going to take at what we combine with. We're going to take a look at these ones. And we have the leading indicators that are very easy to understand. The ones that we're going to be highlighting today is the CCI, which is the Commodity Channel Index, measures the difference between the current price and the historical average price. So it's a baseline of 100 on the top and a red line of minus 100 on the bottom. And then we have this turquoise color line that bounces between the two. The idea is basically to use it when you see it's all the way at the bottom, means it's overpriced based on historic price accuracy range. And then when it's above the green line, it's above the average price of this asset that you're following. Easy one to understand. Stochastic oscillator is a lot more commonly used, a lot more known, I would say. So it is a very simple one as well to understand. It is used to generate overbought and oversold trading signals, utilizing a 0 to 100 boundary range of values. So yeah, if anyone knows how to use the RSI, this is very, very similar, but instead of having one line bouncing between the 70 and the 30, this one is set on 80-20 as the two barrier levels. The upper one is at 80, the lower line, the red line here, is at 20, and you have two moving average lines that are more or less preset in the middle here, and what you're looking for is crossover moments above or below. These are really nice opportunities when you see the market reach the low point. It is down here considered very much oversold, so you're expecting to see the blue line, the turquoise line, move above the red line as we see here in the example and start moving upwards. And that's a very good way. If you caught a trade, for example, at the bottom there, entered just when the cross happened, well, hopefully you did win this trade opportunity. A very nice clear signal. Stochastic is one of my favorites. I do use it quite frequently, as we will see. Hopefully we'll get a few trades in on the live part that's coming up very soon as well. I haven't had the best of luck recently on my live trading on the webinars, but hopefully that will change today. But yeah, let's get into that in a moment. Now let's look at some other combinations that are possible. And for leading indicators, others we can use here is the MACD, as Alexander uses, as he mentioned earlier, and then RVI, Q-stick, TTO, TD, oh my god, TD, oh my god, I can't even say it, DTO, oscillator, the AO, RSI, and RO. My god, that was a mouthful trying to get those DTOs in. And then lagging indicators, Bollinger Bands, alligators, ATRs, parabolic SAR, the McGilly dynamic, high and low bands, and Kiltney channels. Really good stuff to use for all MAs. Ivan is asking, can explain their usage. Well, Ivan, MAs basically are in everything, and they smoothen out more or less the price of what we're looking at. We'll be seeing this on your live account in a few seconds, but if you're not using any indicator at all, you're just looking at charts, then hopefully you know how to use the candlestick patterns. We did do 2 webinars on them so far, and there is a part 3 in the pipeline coming up soon. But if you are not using absolutely anything and you're not really comfortable with the candlestick patterns, then you are more or less trading on emotion, and that's not the best way to trade. By just simply using a moving average, you will see very shortly, I'll do this on the live account as well, but you'll see the moving average will give you a price of where the market is fluctuating, where the price is keeping high and lows. If the market is overbought or if it's oversold, you can use it as a support resistance. Also, you can use it as just an overall trend understanding. If doing you'll see very shortly. Ivan, just stay with me. You'll be getting a very clear explanation very soon when I go to the live account on this one. And that's right now. Right, so, okay, I have them implemented here already. I hope you guys can see my account here. This is Euro USD. Let me just remove them for first and foremost, get rid of them. Where are my indicators added? Let's get rid of them. So, I'm going to come here to moving averages. As I said before on the presentation side, we click on moving average. I personally like to use the WMAs, so I'm implementing them. First one, I'm not going to change it. I'm going to leave it on a 14, which is 14 candles it measures. So if I'm looking at 1 minute candles, this measures the last 14 minutes and gives me an average of those 14 minutes. So I'm leaving that as it is. I'm going to change the color to a nice lime green here to make it easier for you guys to see. I'll make it wider for you guys to see it also. And there it is. Now this is giving me more information on what I'm looking at on the Euro USD automatically. I can see if the market is trading underneath the line, it means that it is oversold, it is a downtrend. If it flips above like it is here, it's actually touching the line, so it's not so great on this example that moment. But if we do go back further, let me see. Okay, here for example, this is showing me an uptrend and the market is trending above it, trading above it. So this is showing me that the market is in an uptrend, just based on a 14 candle frame. Now, bear in mind, my candles here are 15 seconds, so it's not giving me that big of a range. How I can combat that is by going back to the indicators, back to the moving averages again, taking another WMA. This one I'm going to change it. I'm going to make it into 100. So this one is measuring now the last 100 candles, a much bigger berth. And we can see it's a lot slower now. This one now will show me the long trend, the overall trend for the last 100 candles. And on Euro USD, I can see it's a long downtrend. Looks like the euro is really struggling today, as it was in the last few days, down to almost equal level with the dollar, which is extremely low for the euro, which was trading above the 120s not that long ago. So euro is having a really bad time, and it's quite obvious if we're looking at the news every day where all this bad stuff is coming from. So these are the two, and I can use them perfectly well just as it is. Ways I can use them would be simply to look for crossover moments. I'm seeing that the trend overall is a downtrend. Market is trading underneath the red line, my long one, and then it's now touching, bouncing off the green one. When I see a cross above, that's like a caution sign. When I see a cross below and the next candle confirming, so this candle opened without a touch, this would be a good entry moment. If I'm looking at 2-minute expirations, each candle is 15 seconds. That means that I'm going to be looking at around 8 to 10 candles for my expiration. So if I entered the trade here, let me just highlight this one in here. So if I entered here, this is the first 15 minutes. So that's 15, 30, 45, 1 minute, 115, 130, 145, 2 minutes. I entered the trade up here. It closed there. If I went for the 2 minutes plus the 30 seconds for the expiration, that would be 2 more candles, means the trade would end more or less here. So I opened it there, closed it here. Once again, what I'm looking for is this crossover moment on the short trend line. The long one is the red one, the short one is the green one. So once I see a cross from above coming under, wait for the next candle to close. I want to see the next candle not to touch back onto the green line. This is very important. I want to see it open underneath and close underneath with no touch. As soon as that happens, I can open my trade. As soon as it can be, as fast as can be. In fact, I could even open it somewhere here as well. By understanding that there's 3-4 seconds to go and I can close it, I could definitely do it there and open it knowing that it's not going to bounce up in the last few seconds. The other way to trade it is by pulling pullbacks onto the line. Let me see if there's any examples here. Here, for example, there was a pullback. We saw the market come, it touched up here, pulled back to there. Again, it pulled back to the line, closed under. This one didn't. But there's lots of touching after. This is a bit more risky. But if you do find a moment where you could see that, a touch, a close underneath, the next candle goes up, closes underneath again, you could have opened here as well. Same thing goes. It would have been a bit more touch and go, this one. This would have been your first candle. So 1, 2, 3, 4, 5, 6, 7, 8. Trade would close there, or here, or anywhere in this window more or less there. And again, if you opened your trade at this moment here, as we mentioned, and the trade closes down there, it is a winning trade again. Okay, Alexander asking, you have MA 200 on 1 day and 1 week. Well, yeah, Alexander, you can have longer MAs for long trades. If you're doing Forex trading for long term, like a couple of day trades, and you need a longer berth, a longer understanding of what the trend is doing on an overall, you can definitely have two moving averages. You could even have three. You could have a 200, a 100, and a 20, just to give you three different ranges. You could see, as I'm seeing here with the two, one fast moving one slower moving one. You could have a 200, which would be most likely even slower. It might be showing up here a much more like leveled line like that, a shorter one. So that's not a bad way to go for long trading. For short trading, this is more than enough. 2 is enough. If you want to go even better with this, you just do the third step. Come back to the indicators. You come down to the momentum ones we said, and we're going to choose our RSI could be good, or stochastic oscillator is one I'm going to go with today, and I'll just implement it as it is, and here it is on the bottom now. So just bringing it to the more recent now, and there it is. Once I have them set in, this one will show me overbought, oversold. This one will show me what I mentioned before, the crossing over or the pullbacks onto the line. So this will give me a bit more accuracy into knowing if the price is overbought or oversold. For example, now I see the overall trend is kind of level right now on the Euro USD. The small trend was going up, now it's curving down, and the market is trading between the two lines. This is exactly where you don't want to be and trading. You want to see the market above it. If it's above, means the market is trending upwards. Above both is good, and you want to see the market coming back down. Let me just highlight my screen again. So yeah, you want to see the market like it did here. Like here's the cross we said, next candle. So that would be a good entry point under that one. So 1, 2, 3, 4, 5, 6, 7, 8. Where did this one close? It closed more or less at this point. So it would have been a successful trade looking at that. More risky if it was a 10 candle trade. But we want to see markets, or the crossover moment here we want to see combining with this important as well. Here it's overbought. It's close to the upper side here, which is not the greatest. Here as well, it's on the bottom side, but we see it's already crossed through. Not the greatest. We'll hopefully find better moments on the other currency pairs I have ready here. But importantly, once you do have them saved in, you don't want to be having to implement the indicators every single time you're going to go to a new asset. So a good little trick you can do is come back to your indicators, you go to your added, you have them here, MA 14, MA 100, and the stochastic as it was. You just come to the save template and you write in what you want to write. I wrote my one in already as 2MA plus stock, right? And it's already saved in my template. So once you did that, I'm just going to go here, for example, this as the example, save it, and here it is all the way at the bottom of my templates. As I said, I have it already set in, and then you just open a new asset. Let's go to options, let's go to binary. Let's see, do I not have this one? USD JPY I do, USD, okay, Euro JPY I don't have it. And see, it's implementing automatically now the indicator in for me. And it will always do this. If it doesn't automatically do it, you just simply come here, go to your indicators, delete them. So it comes to a naked platform with nothing on, just candles. And you come indicators, you go to templates, and there it is at the bottom here. Any one you want. 2MA is just the 2MAs. If you don't want to use the stochastic with this, if you do want the stochastic, just come back, 2MA and stock. Once you have it saved in your templates, saves you a load of time having to readjust. Then very importantly, another little trick, if you do have your favorites like I do, I have for today's market, I'm looking at a combination of multiple things. I'm going to look at the price returns It's giving me 88% on quite a few on the short binaries, which is very good. I can even check with digital, see what they're giving on digital. It's giving higher, 92, 89 here. But again, there is a little difference between binary and digital. If your binary trade ends exactly where you opened the trade, it's called an equal trade, and your investment is returned back with no profit, but you get your investment back. On digital, if that happens and it ends on the entry point, it's not considered an equal trade. There is no equal trade on digital options. It's considered a losing trade. So this is something you have to ask yourselves. If you do see that you get loads and loads and loads of equal trades, then maybe you're better off doing binary trading. If you don't get lots of equal trades and you get one every 20 trades or so, then maybe the 2, 3, 4% extra you're getting on digital is worth it. And you can always go for the digital trading just to make that extra little profit. For today's example, I'm sticking to binary. And like I said, first thing, I'm looking at the price returns, and they all give me a good return. So the assets I'm liking, I chose already. Here they are up here. I come to the multi-chart option, and I'm going to put 4 of them open. So I can see all 4 of my favorites at the same time. Now, very importantly, I want to have my investment amount adjusted from before based on my account balance. What I have on my account, I always work with 2% per trade. This way I don't get too emotional. If I lose a trade, it's only 2%. I can always make that back. If I was doing anything larger, 5% or 10% or random numbers, then that would not be so optimal, right? So 2% is more or less what I'm looking for. And simply use your phones, use your computers, use whatever you want, enter the amount you have on your account onto the calculator. I'm doing it always before I do any single trade, getting myself comfortable doing that. So I have 4437, then I'm going to multiply it by 2%, and it tells me that my next trade should be 88.74 if I want to be exactly precise. So I could even come in and put the 0.74 to make sure I'm doing exactly 2% of my balance. If I lose 2%, not the end of the world. If you're doing 10% trades, 20% trades, which is super aggressive and not really recommended, then you will be more emotional, right? If you have an unlucky trade that loses in the last couple of seconds, you will be upset. You'll be triggered, and you don't want to be triggered when you're trading. If you lose a 2% trade, as long as you didn't panic yourself and do anything irrational or too aggressive, then you can always say, okay, it happens, I'll get that back soon. So let's see here now. Let's see which is looking better. This one automatically looks nice for me here. I can see it is showing me what I'm looking for. Only little problem I see, let me just go to the single grid since I found something nice. What I'm looking for is, like I said, the overall trend is showing me a downtrend. The small trend, the 14 line, is showing me a downtrend also. I saw here a moment where the market touched. It pulled into this channel. Why did that work? Right, so it pulled in here, came back down again. It retraced back down. Doing the same thing here. Now, what's worrying is the stochastic right here. It is showing me that the market is reversing back up again, which is not really great. I see a candle closed above the line, which is not great. What I'm going to hope for now is to see the market hopefully doing a kind of a movement where it's coming up, maybe zigzagging. This line might curve and start pointing up, but I want to see it come down again, cross underneath, and I can catch the downtrend movement after. Hopefully it'll go something like zigzagging downwards. The line will continue more or less like this and like that, hopefully. But I want to see more red now to challenge this line. And if I do see that, I'll have my trade ready. So as we mentioned, I like doing trades of 2 minutes approximately available. So 2-minute trade plus the 30 seconds will mean I'm looking for 8 candle movements. Now it's in the dead zone. Right between the 2 lines is the dead zone that we don't want to be trading. This is encouraging. Stochastic is showing me that it's getting overbought, so I want to see these ones cross over now. I want to see the blue line coming underneath the red one, start pointing down. That will be really good. That's going to be the first signal I'm waiting for to see that the downtrend is back in again. As I'm looking here at the USD and the JPY, there is a long downtrend coming on for quite a while here, right? This is the moment more or less when the downtrend started. We can see the high point up here, and all this movement downwards is more or less triggered, especially from here onward. Look at that massive downtrend. If you watched the video we made about Fibonacci's, you would be able to put some really nice Fibonacci's in here. So you're going to come to your graphic tools, take your Fibonacci line, and you see that that's where the trend more or less started. Pull it down to here, and you want to see how high the pullback goes to. Once you identify the end of the pullback, in this case it came between the 2 here, and then you're expecting to go even further down. That's for the Fibonacci retracement. Retracement. If you're looking for the Fibonacci extension, actually, let's see. This might be quite appetizing right now if I see a crossover coming underneath. So let me get my timer ready. 240, not the greatest, but I want to see if I catch a moment here if the market does break underneath. The stochastic is already showing me that the downtrend should have started, but let's confirm it with the second one. This is why it's good to use not one but multiple indicators. Please keep doing these webinars, Florence. I have no intentions of stopping, and I hope all of you guys are liking these webinars as well. If there is at any moment any polls going on that my moderators do, asking if you like the webinar, asking if you like me as your host, please be honest. If you don't like me, I'll be sad, but we want your feedback to make these videos better and better. And if you like the webinar, like I always say, please like the video, subscribe to the channel, click the notification bell, and you'll be notified for all future coming webinars. As you may have noticed, for you keen viewers, I'm wasting a bit of time here trying to hope to catch this market to come in, so I can hopefully catch a trade for you guys, but it's really not working for me. It's coming back up again on the stock, which is good. I want to see the crossover it's doing now, and I want to see the line breaking under again. It is still a downtrend on the long trend. The short trend is getting upwards now, which is not the greatest, but this is only measuring the last 14 candles. So our last 14 candles more or less is this moment here. So obviously this moment was an uptrend, hence why the line is pointing up. So that's one thing to take into consideration. Now the market is switching direction, so I want to see it break underneath and come under. 30 minutes is gone already, so this is going to be, okay, here we go. Hopefully I'll be able to get one trade in for you guys, and hopefully it's going to be a good one. Let's see. It just crossed the line, but came back up again. It's above the stock still, so that's good. I want to see it crossing, pushing over. I want to see it come underneath the line. Once it does come underneath the line, that's what I'm waiting for the next candles. I want to see the next candle to open under the line, close under the line, hopefully close to it. There we go. That was nice. So this one already opened far from the line. Let's see what it does. If it comes up and touch it, okay, that looks good already. Okay, I've got enough time. I don't want to push it now to 2 minutes and a half. Let's see it pushes up a bit. Okay, and we're just going for it right now. Hopefully this is going to be a good one. And let's see. Stock is pointing downwards. Ooh, I see comments on the chat. Love it, says Florence. Best platform out. Lovely. Let's see if I can win a trade for you guys, because I haven't been doing much of that in the last webinars, but I have been doing quite well on non-recording, when I'm not recording. So yeah, wow, that was a big jump there. Looks like the volatility is really picking up. Look at the size of that candle. Almost ended in a doji. So this is kind of awkward that the market is fighting right now, not knowing where to head. But let's see. The downtrend was going on for a long time. That's my one concern right now, because we had that massive downtrend from all the way up there. It may have tanked out at that lower point, and this might be an uptrend starting now. But anyway, the signal I got from this, I'm not regretting it. There was a cross underneath both lines. The upper line, as we can see, is up here. The second trend is there. So I'm not regretting it. The signal I got was clear from both, hence why I went for the trade. It just is pretty volatile right now, and we have to just wait and see what's going to happen with this. Okay, 45 more seconds more or less on this. Oh, there we go. That's looking promising now. Let's hope it stays underneath. Volatility is pumping all over the space, so I'm going to be holding my breath, I think, until the last seconds on this trade, unless the trading gods are on my side and the market does what it was hopefully meant to do with the indication we got there. But like I always say, part of trading is winning, part of trading is losing trades. As long as you don't do anything irrational and you don't trade it with emotions, if you win a trade, it's great. If you lose a trade, it's just part of trading. As long as you don't overinvest and you're invest. Oh my God, look how dancey that is. Okay, oh wow, last second. Well, that might have triggered many traders. This last second in and out can be very triggering for many people. The important thing is you have to learn from your mistakes, and in this case, there wasn't even a mistake. It did what it was more or less intended to do. It crossed underneath. The market did come from above down, This was a good signal here between them. There was a nice crossover and a down movement here. We just got very unlucky with the timing here. As we can see, it was underneath for a good amount of it. It was above for a good amount of it. So it was very, very tight. I lost some money on this one, but it's 2% of my balance. 2% is very recoverable. If I was doing bigger trades without control, then I might have been more panicked, which is something we do not want to be doing, guys. Okay, I hope you guys have understood how to use this. I hope my moderators have been answering questions, and I will be doing some as well right now. That covers more or less everything we had for this. So let me just... Is that still going? No? Okay. Let's go back to the presentation here. And we have a thank you screen where we're going to do some Q&As right now. I'm going to come on my full cam. Okay, here we go with the questions. Guys, let me see. That triggered... Oh my God. Satish got triggered. Kumar. It's trading. It's trading. Don't get triggered. This is the important thing. CCI, Alexander says, well, I can show CCI as well, but it's a very, very basic indicator. And because I'm not really that comfortable using it, I don't want to give you guys any false information about it. It's very similar to what we just did with the stochastic. You just basically have a larger range, and it is a bit more trigger happy. So there is a lot more signals coming from the CCI. From the three oscillators are more commonly used, I personally use RSI as my most common one I use. Then I use the stochastic, and then third would be the CCI, which I very, very rarely use. We are planning some short videos to do very soon, where we'll be doing very short videos, 5-minute videos, very simple explanations of these indicators. So we're going to definitely do one for nearly every indicator we have on, and we'll definitely go into detail on everyone, including the CCI. We're limited on time. I don't want this video to go on for 1 hour, and then no one watches an hour-long video. So I think we covered enough here. But just answering before, when I see people write that they get triggered, I get triggered. So I used to get triggered a lot when I was first new in trading, and most times because I was not even sure I knew what I was doing. I thought I knew, but I didn't really know well enough. Once I started using money management, controlling my emotions, and understanding that we're trading on binaries are super aggressive, so there is a lot more noise, and with a lot more noise will be a lot more wins and a lot more losses. Important thing, have your limits. If you're having a good day, have from before a target of what your amount is. If you are having a couple of hours available to trade and you averagely get, let's say, 10 or so trades per hour, maybe a bit more, know that if you're doing 2% per trade and you win 10 trades, that's 20% more or less profits. So that should be a target. That's more than enough, 20% profit. On an account over 1,000, if you have a 2% trade, that's going to be $20 the first one, more or less, and your target and your successful day will be $200. The next day you'll start with more money, you'll have 1,200. If you have another successful one, you'll make another profit over 200 this time. When you have a bad day, you'll not lose more than 10%, hopefully. This is a good 1-to-2 ratio. Risk 10% to make 20%. Don't risk 11%, right? That's a very key and important thing. Money management, which I'm talking about right now, is a video we are going to be putting out there very, very soon. I think that one's coming out in August. If you don't want to wait until August for a live video, don't worry, you don't have to. We are having another video in English from myself as your host coming up on the 21st of July. The subject of that one will be a strategy called a dual stochastic strategy, and it is for binary trading what we're going to be showing. So note down the date, like and subscribe to our channel, ring the notification bell to be notified, and you can sign up for it to watch it live as you have done now. I'm putting that on the screen as well as a little reminder. Like, subscribe, and ring the bell. If there's any Arabic speakers watching right now and you like to watch Arabic webinars, we do have one coming up very, very, very soon, tomorrow actually. And the subject of that one is a triple trend strategy in Arabic with our host Abed. So if you do speak Arabic and you want to watch that one too, definitely tune in tomorrow, or just click on our channel and you can find the link for that one and watch Abed too. It's going to be a great webinar. Hopefully you're going to like it. Let me just see if there's any more questions I can answer, because I'm coming up to the 40-minute marker now. Thank you for this live session, Professor Angelo. That sounds awesome, Mr. Trading Market Professor. Right. I'm sure my professors in high school and university would not be very proud to hear me be called as professor, but I think I know a bit more than they do about trading already. Which time is most profitable, 5 minutes or 2 minutes? Excellent question here. And the answer to this, it's depending 100% on every individual trader. I can't tell you what is more successful. I can only tell you what is more successful for myself. And for myself, it would be 2 minutes. I've been trading long enough to figure out that if I do a 1 minute, 2 minute, 3 or 5 minute trade, payouts are the same, but I get a better result with the 2 minute expirations. So for me, 2 minute trades are better. But for Alexander, maybe it's better a 1 minute trade. For Kumar, maybe it's a 4 minute trade. This is something you have to gain the experience of yourself doing. And there's no one should tell you that's right or wrong. The only judge of right or wrong is your account balance. If you started trading a week ago with 1,000 and a week's passed and you're up to 1,800, you had 4 successful days on a trot, you're doing 2 minute trades, then if anyone tells you that you're doing something wrong, then clearly that person should not be even talking to you because he's not into you in your benefit there. You should be the judge of it. If you did the same and you had 3 bad sessions, then definitely look into it. If you started with 1,000, you lost 10% on each 3 days, then look at your account, figure out something is not right, whether it's the indicators you're using, whether it's the time frame you're choosing for expirations, and in that case, just adjust it. Try 2 minute trades if you're doing 1 minute trades unsuccessfully. Try 3 minute trades. If that's not working, then if you are a VIP, definitely call your account manager, request a callback, tell your account manager to help you out, give you a training session to change something around. You should not be having more than 3 bad sessions in a row as long as you're sticking to the plan, right? Money management, super important, and I urge all of you guys, if there's one video you all have to watch, that will be the one coming up in August for money management. The most important lesson anyone can give you for trading is the money management, and hopefully we're going to give you more than one option of how to trade with money management. Aggressive, less aggressive, and the most passive, which is my favorite, the 2% go. So guys, that more or less covers everything I have for today. I hope you enjoyed everything. Hopefully we can have giveaways again coming up on the next webinars. If there was anyone anticipating or looking forward for a giveaway today, well, I'm sorry to disappoint. We are going to hopefully have giveaways coming up in the next webinars on the 21st for my one, Abed tomorrow, as I mentioned. So once again, thanks everyone. Thank you so much for watching these. I hope you find them useful and educational, and let us know. There's the comment section underneath. Send us comments, send us feedback. We really cherish that and need it to make these webinars even better for you guys. So that's it. Thank you.